Hello traders, Gary Wagner here. It is 12:20 in Honolulu, 5:20 in New York on Tuesday, 9th day of January 2024, and this is the daily report for gold and silver. Gold is trading fractionally lower today, currently down 50 cents or 0.02%, with the most active February contract currently fixed at $2,033. Considering that gold was trading to a high of about $2,093 on the 23rd of December, just before the holiday season, we have seen about a $50 decline in gold over the last week and a half. Traders are anxiously awaiting the government's report on inflation vis-a-vis the CPI for December. That will be released on Thursday. The expectations is that core inflation, which is currently at 4%, will show a year-over-year decline of 0.2%. However, headline inflation, the inflation that is most important to Americans because it includes energy costs as well as food, is actually expected to rise by 0.2%. taking that gauge to 3.2% year over year. We did see dollar strength return mildly, though. The dollar index is currently up 0.21% and fixed at 102.521. After 3 days of mild moves following that large sell-off that occurred on Wednesday, the third day of January, we saw silver decline by approximately 22 cents today, or 0.94%, taking the most active March contract to $23.09. We remain long March silver after issuing a trade alert last week. We entered our position at $23.18. Our stop is a good till canceled stop at $22.74. The one thing that I do believe is that we should have strong technical support from $23 to $22.95. That is corresponding to the 61.8% Fibonacci retracement. This is a fairly long data set that we are using from the lows that we saw in October, on October the 3rd, when silver was trading at $20.87, up to the highs of December 4th, when silver traded to $26.34.5. You can see that we just opened trading in Australia. We are now looking at silver at $23.17, roughly where we entered the trade last week. As you know, we are currently flat with no active trades in gold. In terms of our interpretation of recent price action, as we talked about, we've seen a tremendous $50 decline from just before the holiday seasons to current pricing. On a technical basis, we believe that a critical line in the sand, so to speak, occurs at 2030. That is where, if gold does move down to that area between 2030 and 2020, we would look to initiate a long position. We believe that if it does break below the 38.2% fib retracement at $2,033, we could see it drift near 2,000, although I don't believe that that is as likely. However, that will be based upon the fundamental events that come out in the upcoming week. For right now, we want to see how it reacts. It did open overseas, currently trading at $2,036.20. That's up a couple of dollars from the close of Globex about 1 hour ago. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.